Hey guys, you've tuned into Money Control. I'm Manisha Gupta, and quite volatile is how we continue to see the crude oil prices even now. It has been nearly $5 to $8 of a move every single day in this week for the crude oil prices. Well, last 24 hours have been quite important for the commodity. We have seen one, the US inventories continue to decline for yet another week, and this time around by more than 5 million barrels. That was a bit of a surprise drawdown. The other is the OPEC and allies meeting, and for many, many months, it has been nothing out of the box. They've met, and sometimes for a record 10 minutes as well, just to ensure that the next month quota is yet again fixed at the same 400,000 barrels per day, which they have not been able to produce, by the way. This time around, there was a longer meeting, one, and then they have increased or boosted the quota or output plan for the month of July and August, much on the higher side, at around 648,000 barrels per day. That means if you look at both the months together, it is an output of around 1.3 million barrels per day. Now, the reason the markets ran up was one, they haven't cut Russia out of the cartel. Two, even if they have increased the quota a lot, remember, overall OPEC, the spare capacity is less than 2 million barrels per day. Most of the OPEC members have maxed out their output capacity. So that means that they really can't increase their own quotas. So there are two members in OPEC who can actually do this. One is Saudi Arabia, and the second is UAE. And the market really estimates that even with 1.13 million barrels, 1.3 million barrels per day, that they're expected to produce in the month of July and August, the OPEC countries perhaps will be able to do just about zero point 0.5 to zero point 0.6 million barrels per day, not more than that. So even as there is a push to increase production, it really is not going to go to the kind of levels that OPEC and allies have actually put out. So that clearly continues to be bullish for the markets. US is producing a lot. US is exporting at record highs, but the US demand itself is also much higher. And then US has been releasing crude oil from its strategic petroleum reserve. So to get back to that inventory, they will have to buy it from the open markets yet again. So on one side, US is giving crude at lower prices to the users, but on the other side, it needs to ensure that it gets that crude back as well. So there is buying that we've seen come in from the US too. Chinese markets, well, yes, they have opened from the first week of June. Today is Dragon Boat Festival, so China is celebrating a long weekend. But markets do believe that the Chinese demand will also come back because they've opened manufacturing, factory activity, transportation, movement of citizens there. So that demand eventually will start coming back. So the demand side is what is pushing the or ruling the prices right now, is the reason we have seen 2% of gains in case of crude oil prices in this week itself. And as I said, this is after 6 consecutive monthly gains that crude prices have put. June is started on a positive note as well. Take a look at the demand numbers itself. 2020 wasn't so great when it comes to demand. We saw overall global demand at around 96.82 million barrels per day is what the world was consuming. For 2022, we already are looking at pre-COVID and higher numbers at $100 per barrel, 100 million barrels per day kind of demand coming in for markets. So everywhere that you look, there is bullishness in sense of fundamentals there. The speculative long positions have been on the higher side. The economies are opening. The US dollar index is off its 20-year highs, and there are way more reasons to buy than sell crude prices right now. The US non-farm payroll data that comes in today is going to be an important event or a number to watch out for. But the markets believe that dips are perhaps buying opportunities in crude right now. We're already at around 118. Watch out for levels of 120, 122, 125. That could be on charts not too far away from now.